You keep dropping these quotes here. Easier than you think, harder than it looks. I want you to contrast that or play with this, expand on it, whatever you want. Price is what you pay.
Yeah.
Value is what you get.
Yeah. Well, there's an old saying that says, anytime that, price is other than, value, you have to sit down and explain it to somebody, because the tendency is people equate price and value as one and the same thing. If price goes up, it's more valuable. If the price goes down, it's less valuable. Of course, in markets and financial instruments and stuff like that, that's not true. The value of a financial instrument, set aside, real estate and Bitcoin and Van Gogh paintings, is, the cash flows of the investment discounted at a present value and estimated over long term at a reasonable price. And that's your value. But, people don't want to get, it's kind of like, that's noise to them. It's like, oh, blah, 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 blah. If it's going up, it's worth more. And if it's going down, it's worth less. And Warren had a great saying. He said, even though it's interesting, because if you back up to security analysis, there was 1934, a great physics review on the first page. Actually, it was, Horace, the great Greek philosopher, basically doing reversion to the mean, right? That which goes up will come down and that which has gone down will go up. Warren said years later, polling does not replace thinking. There's some things that go up, they're supposed to go up, like 10 times in Coca-Cola, it kept going up and everybody said it shouldn't go up and it kept going up. And there are things that go down in price, like Dempster Hill manufacturing and arm implementation companies and all these disasters that Warren had, that, reversion to the mean would have been a lousy strategy, for that. But, if you have to get into the nuances of how to think about value, you lose about 95% of the people, except for this. I do find that the people that are smartest about this way of investing are, in fact, business owners. Now, they don't come to it naturally, because for some reason, even Graham wrote about this, those strategies that use to build their great net worth by, owning a business seems to escape them when they go to the stock market. They end up doing something totally different. But if you get a business owner and you say, what are you doing? I said, well, I asked them first, I said, what is the most important thing for you? And they said, well, cash. I said, yeah. I said, why? And he goes, well, I got bills to pay, I got to put kids through school and, I'd like to pay down the debt and stuff like that. So I really look for cash. And they go, that's funny. That's what I look for. First thing I do is like, how much cash is coming? I said, what else do you look for? He goes, well, the growth of cash. And I went, God, really? Me too. I look at growth of cash. That's kind of interesting. I said, what do you think about margins? He goes, I'm always trying to get the margins higher, and get my returns on my invested capital, how much I owe the bank and blah, blah, blah. I said, that's exactly what I do. I said, do you want to play this game in the stock market? They go, you do that in the stock market? I said, yes, that's what we do. And they get it. They go, oh, okay, I get it, right? And business people seem to resonate to the message because it's exactly the way in which they've built their own net worth.